Okay, let's go ahead and get into the stock market technical analysis. I'm going to put this video out. We're going to go through the broad markets. I suspect I'll probably get a lot of comments on this video today. It's not going to be a very popular video in general, but I want to put it out there today because I need it as a point of reference in the channel. So what we're going to do is go through these broad markets. Drop me a thumbs up. Check out the private member group. I've been in there all week commenting. I've been doing a couple private videos. Yesterday I did a private member video, really trying to keep things a little bit more exclusive. But today I think it warrants a public video. So triple Qs. Obviously we're getting rallying from Google and a little bit from Microsoft, not as much, but mostly Google on earnings. Okay, so just let's understand earnings, and I'll get to the Google chart here in a second. But earnings, okay, when the initial reports come out, algos just fire orders. Boom, they just read through stuff, fire orders. Okay, and then that's really mostly what takes place. You don't have a whole lot of liquidity in the after hours, and then when the market opens up, then you see the big money come out and say, okay, how do we want to move positions? Big pension funds, things like that. The algos have fired kind of the initial orders. What do we want to do next? And then you'll see the big money moving around in the regular session. So we'll just understand that. So diving into triple Qs, let's look at that. Then we'll get to Google. On the daily chart, we have rallied into, there's a little bit of resistance. I would go to the hourly chart. You have to kind of see it right here. But you can see there's a little resistance right in there, kind of multiple candles where we traded. The big resistance is right there at about 434. It's about 433.75, 434. It's kind of just, right in that area. So if we go back to the daily, if they pop it into there, that's big resistance. Again, I would expect if they get in, if they get up there, they're probably going to pop it just for a day or two, or just intraday maybe. Not by much. I don't expect, I think they'll just run it up, maybe intraday, and then it'll fail. So I wouldn't expect really like a strong impulsive daily close above that level. If you see a strong impulsive daily close back above this level, really signifying a break back into this trading range, then that's, if you're short, that's where you most likely want to stop out. But again, if you get close, they're probably going to try to run your stops at least intraday by making it look like it's going to break into the level, and then it'll fail. So you really want to wait for that daily close. Okay, so that's what to do on the upside. However, let's look at the downside. And I know nobody thinks there's downside when the Google's up, gaps up 10%. They can't see any of the downside. But again, on this channel, I want to skate to where the puck's going to be, not to where the puck is at. So ultimately, I'm looking for where's the market going to be next week, a couple weeks from now, and not where's the market at right now. I can't make money where the market is right now. I can only make money if I anticipate correctly where the market's going to be next week. So on the daily, we're at that little resistance zone. If I go to the hourly, you can see here that we're starting to show negative divergence. I'm looking for this. I've got it already marked out. So if you look at the hourly chart, you can see, boom, you popped up. You made a slightly new high there on the hourly, and yet see the momentum. It's starting to turn down. All right, let me zoom it in on the RSI, and you can see right there on the RSI, it's just starting to turn down to hold negative divergence. All right, so that's what I'm looking for. So I'm seeing this as a divergent high. Now so ultimately that tells me that we're very likely going to get a pullback down to about 425.50, and then if they want to, they could potentially try to push it back up, push it into that test zone of that final area of resistance. That's possible. But you'd see the RSI kind of turn down, and then they might push it up for kind of a new divergent high, make a new divergent high. At that point, we'd be running into major resistance with negative divergence. It would be an area that we'd likely get rejected. I'm not so sure though, and I'm not holding out for it. I'm not so sure they're going to push it into that big zone of resistance overhead at 434-ish, because it's such an obvious level. If I go to the daily chart, you can see here on the daily, it's just such a clean and clear, obvious level of resistance. Usually you're going to see sellers step in early. So that's the way I'm leaning. I don't think they get up there. I think they stop it right in this area. And and then we reverse, and we start to make our next leg lower. We're still kind of bear flagging. I mean, it didn't play out exactly like I thought because we got the pop up on earnings today. It's earnings season. So there's lots of volatility, gap ups and gap down, but you still have that flagpole. You kind of are making like this little, this flag right here, and it can still break down to the downside and give us the projected target. Right now, the projected target would be, it's still right there, about 402-ish. So nothing's really changed from my perspective, even though Google has, had a big gap up on earnings. So let's flip over to Google and we'll take a look at that. Okay, here's Google. Now, remember what I said about how the algos fire on the initial reports and then the big money takes positions when in regular market session. And so we want to always be positioned where the big money is. As of right now, doesn't have to remain this way today. I'm putting this video out this morning. But you can see there's nothing but selling. All right, gap up and profit taking. That's what's going on right now. Now, maybe there's going to be some buyers that step in on this first wave of profit taking, and Google Alphabet kind of hangs out up here. But in general, we are seeing selling, nothing but selling as of the open today. And then you also have on the daily chart, you can see, look, resistance, resistance, resistance. Nice, clean and clear channel that this thing has traded in, and they gapped it up. So I suspect it's going to trade right back down to the channel. Maybe a small little bounce there, but ultimately I think it's going to fail, and this is going to be a false breakout. This is going to mark the high water mark in Google. All right, that's my forecast. So I'm saying this is likely the high water mark in Google. We're going to sell back to support or this top of this channel probably for today. Maybe hang out there for a few days next week, and then ultimately break down and back down into the channel. More selling in Google. Okay, so we'll see if I'm right on that one. It's kind of hard to say. I'm not trading this one individually, but just something to look for. If it does continue to sell down, also looks like we will have negative divergence right there if it continues to sell down on the daily chart. So you'll see the RSI start to turn down. You'll see the PPO turn down, and you'll have negative divergence, meaning this is a divergent high with a high likelihood that this divergent high will get sold into, continue to sell into. So I'm marking that as the high water mark in Google for now. And then flipping over to the Nasdaq futures, you can also see on the hourly chart, this is just kind of shorter term stuff, but you can see basically right here, higher high in price, and today slightly higher high, and yet momentum still diverging, dropping off. So negative divergence, price action tells me that we're going to sell off today, or just not go much higher. All right, we don't have to sell off, but maybe just not go much higher, and ultimately pull back. Probably looking at a pullback. I think we're going to fade this entire Google pop. Maybe today. All right, just something to look for. Obviously, if it keeps going higher, it's going to burn through the divergence, and then that thesis is kind of played out. At least if we keep going higher, we're likely going to go up to the next level of resistance, about 18,066, and that would correspond with kind of that range that major resistance level on triple Qs. The 10-year Treasury yield not really pulling off, down a little bit today, but nothing that's breaking a trend or changing any kind of pattern. So we still have an uptrend in interest rates. Again, this is really what I think mostly the market's trading on. I know that periodically it catches this AI pump that the earnings reports, they try to pump it. Here's the thing about Google. If AI is doing so well for Google, why can they not find anywhere to put the money in AI to invest, to grow that line of business, and why do they need to distribute the money as a dividend? Think about that. Fundamentally, when you really can't find anything better to do with the money in terms of growth, then you pay the money back to shareholders in the form of a dividend. And so, just, something to think about. But all right, interest rates rising, You know, today down a little, softening, but nothing that's changed. So rising interest rates will continue to put pressure on the markets. And I'll just go through a couple trade ideas, good setups. JP Morgan continuing to trade, right? You know, it's gap filled. This is resistance. It could go up a little more and hit this this blue trend line, but in general, I like it right here. It's been trading here for a few days above it right now, but close enough, not impulsively breaking out. This is resistance, so I think that's likely the top for JP Morgan. Earnings is out of the way, so I'm looking for that next push lower down to 173.20, and then ultimately the 200-day moving average. So that is a nice trade setup. We're just, you know, we're just coming off this negative divergence that was building for quite a while. So there's your sell signal. There's a rally into resistance. I think it continues. Yeah, maybe a bounce there. Continues to go lower. Here's IBM. Again, IBM doesn't move the markets. It's not big enough, but I just want to kind of call out this island cluster top that remains in place. So island cluster top, gap down on earnings, more selling it looks like today. That's a long-lasting top. And Meta has the same pattern. Here's Meta, island cluster top, rallied up a little bit. I mean, obviously I talked about this in the pre-market. We hit that major gap fill support at 402. So sure, buyers are there, but we've still created an island cluster top. So treat that as the top, and we should go lower. Qualcomm, you know, Qualcomm hit resistance. It's right about here, about 163.70. They're pumping obviously the AI trade a little bit this morning. So, and this is kind of, it's a semiconductor. So I'm a little unsure if it's going to hold this resistance or if it wants to go up and make a back test of the trend line, run up and make a new high and a back test. That's a little unsure, but in general, I still like it as a short setup. Big negative divergence, been building for a while. We have a break of trend. Okay, so this one's, if it's going to go do a back test, triple Qs is going to run up to that higher resistance level. Otherwise, I think it rejects here. All right, so again, if they start to sell triple Qs down, like I'm anticipating, then this one shouldn't go too much higher. If they don't, you know, hold triple Qs down and wants to go up and make, you know, a tag of that 434-ish area, then, you know, this could run up and do a back test of that broken trend line. Eli Lilly coming out with earnings. It looks like this one's going to report next week on Tuesday. So again, this one's still holding this trend line support. You can see there's a reaction there, and we're basically just sitting right on support with big negative divergence. So if I had to guess one way or the other, it's going to gap down, just given the divergence. But it is at support. So if you want to be conservative, you can wait for the gap down. It's just we're seeing rather large gap downs where it really makes it not very objective to short on such large gap downs. So, you know, we'll see. We'll touch base on this one early next week. I don't believe it's going to break down ahead of earnings. It's probably going to hold support. I'd be suspicious if I see it break down ahead of earnings. That would almost throw me off. What I'd rather see is have it rally just a little bit into earnings, and then I would expect a gap down, a sizable gap down on earnings. So we'll watch that one. I'm going to wrap it up here, guys. I will touch base if anything else changes. Feel free to join in the private member group. Link in the description below, and drop me a thumbs up. Catch you on the next one. Bye.